The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 4th. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hope you had a terrific holiday. Great to be back with you. Hey, let's make sure we have an extraordinary day. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, let those fingers do the walking. You can always send me an email, steve@tfnn.com, and inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow off 79 points. Trade out of 25,886. I will tell you that every indice, well, the four primary indices are sitting on support right now, so it is very interesting. You've got the Dow down 79 points. The S&P is off 10, trading at 2891. NASDAQ down 43. Russell down 13. Semis are up 4. Trannies are up 5. You've got the spot VIX index traded out at 1381. That is above its 50-day exponential moving average. Only a 7% move thus far. That is good for the bears or sellers, bad for the buyers. But it's going to be an end-of-day reading. Gold is off $8. Silver down 40 cents. That's nearly 3% to the downside. You've got light sweet crude up 13 cents. I'd tell you who's leading to the upside, but my system seems to be a little cockeyed out there. I can tell you who's leading to the downside. Oh, there we go. Up to the upside is Amazon, up 25. AutoZone up 14, Ulta Beauty up 13, Tilray Inc. up about 9, Madison Square Gardens up 8. To the downside, I don't know. Now, that's all cockeyed out here. Something going on in e-signal land. So let's not take a look at those. Let's go take a look at what did Stevie say when he said everything was basically trading at support. If we take a look at the 4 equity futures contracts right now, we're going to look at the ES first. You're going to see that price is trading just slightly above the bottom of its brand new bullish structured daily profile. That's right around the 28.89 level. We're trading at 28.92 right now. So price is at support. Will this support hold? It's under Stevie's red line / green line at this stage here. So it's really right in between. So that was one level of support. The second level of support would be the bottom, in this case here, the bottom of the market profile. If price closes in the ES mini below 28.89, I believe it's 28.89. I'll give you the exact number during the show out here. Then you've got a break of support, something that we haven't seen here for a while inside the ES. The last time we saw it inside the ES, it would take us back to the when did we break support on a daily basis last? That would take us back into, we'd say, June 21st. It's now September the 4th. So it's going to be a really important level to be watching to give you some kind of idea as to whether or not there's going to be a bit more of a retracement. By the way, a bit more of a retracement could take you all the way back to the August 16th low out there, and that's around the 28.20 level. That's what's going on in the ES Mini. If we take a look at the NQ, price is trading into support. Where is support? Well, in this case here, it too also formed a brand new profile, but support in this instance, support number 1 is Stevie's green line. That was priced at about 75.98. And so price has done nothing more at this stage of the game, come back and test a level of support. So still bullish mode for the NQ, still bullish mode for the ES from a swing trading perspective out there with you. And it's very easy to do this. You can do this. I can do this. This is what we do. We do this out here. If we take a look at the Dow Equity Futures contract, it is testing the top of its box. So this is pretty cool because we get to take a look at 3 different instruments, each testing different support levels. When you trade above the top of a box, old resistance should become new support. That level's right about 25,911, which is in essence where we're trading right now. That might not be the exact number, so just wait till I flip over to another chart out there. It's easier to read on my e-signal charts than it is when price is basically sitting right at the top of the box. Yes, below Stevie's green line. So what? At this stage here, it is still above support. Everything is trading into support right now. Now, if price closes inside that box, inside the Dow, then you're looking at a pullback into the 25,665 level out here. And if we take a look at the Russell 2000, somebody might say, hey, man, how can you say support? It's down basically 13 points out there. I can say support because you can say support. And that means we can say support because it's trading right into Stevie's red/green line out here. Yes, about a point below it, but let's give it a tad bit of a breakout here. Now, if the Russell 2000 decides that it wants to get romping and rolling to the downside, you would be looking for the top of its box to become its target. That's 1694. It does have a Rhodes momentum indicator top signal out here, but it needs to close below Stevie's green line. We'll call it the 1728 level. Now, when we combine that, we're trying to understand what's going on with regard to market breadth because you and I just took a look at some market profiles, tops and bottoms of boxes out there. And if we try to understand on a daily perspective what's going on with 2 that we can track, one being the S&P 500, what we can see is this is still in bullish formation. What do I mean? I mean that there are 164 issues inside the S&P 500 where price is trading above the top of a box, very similar to what we looked at inside the Dow Equity Futures contracts. Old resistance is new support. So what this means 164 issues are trading above support out there, above resistance as well. Old resistance, new support. There are 119 that are trading below the bottom of a profile. That, in essence, is the red line out here. When you get a crossover, it's a lagging indicator, but it is a good indicator because it can show you a shift in change in trend. We do not have that shift as we speak right now, not at 1:13 in the afternoon. That's what's going on inside your S&P 500. If we go take a look at the NASDAQ 100 out here, you're going to see that there are 38 issues, constituents that are trading above the top of a market profile versus 23 down below the bottom. Everything is at support. Market breadth is still bullish. We take a look at the ES, we take a look at the S&P, and we take a look at the NQ. But I don't want to make it sound like everything is rosy or Rhodesy out there, because it's not. And so it's going to be an end-of-day reading. We'll see if those support levels hold. What else are we going to be looking at? Well, we already had mentioned that the spot volatility index was trading above its 50-day exponential moving average. That's 1310, very bottom right-hand panel. When the spot VIX index closes above that, and you have less than a one-day rate of change of greater than 10%, that says that things can get rocking and rolling to the downside. I'm referring to swing traders only. I am not talking about something you would do inside your long-term portfolio out there. The other thing that we have going on right now is we have a clear break below zero in the advanced decline oscillator reading for the New York Stock Exchange. Now look, in this last 7 minutes, that was a mouthful, but it should give you a pretty good idea as to what's going on inside the marketplace. Things are at support, but the market is trying to break that support. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So great to be with you. Hope everybody had a great weekend out there. And as we said, in the opening here, we can easily identify, when we take a look at the equity futures contracts to see that they're trading out at support. We can see that the sellers are trying to break the backs of the buyers. They haven't done that with regard to bearish crossovers, with regard to market breadth. New York Stock Exchange is certainly showing weakness out there because it's advanced decline, which had declining tops in the face of rising price. A little divergence pattern right now today is day one below that zero line, and it always ends badly, or can end badly, not always, it can end badly when you get that combination with a spot volatility that's above its 50-day exponential moving average. All of those tools, indicators, they are end-of-day readings. They don't mean a hill of beans at 1:18 in the afternoon, but at least you understand what the markets are doing, what to be looking for come the end of today's trading session. We do have some callers, or really I should say emailers, folks who let their fingers do the walking. The first one coming from Greg. He was in early, and Greg says, morning, Steve. I'll say good afternoon, Greg. Would you take a look at T? It did a small A to B equals CD with a 1-to-1 price projection of 31.86. The 1.382. I use 1.272, but that's okay. Was 31.41. It hit close to that this morning. Would you buy the D point? Thanks, Greg. Greg, well, that's an interesting question out here. Let's take a look at T. Well, first, if we take a look at AT&T, by the way, that's what's on our screen. Here we have our three different time frame TAS market profile charts. Let's get the data box so that you can see what we have. So we got daily on the left, weekly in the center, monthly on the right. Daily is below the bottom of its profile. So we can say, okay, that's bearish. But what Greg is trying to use the leading indicator tool, the lightning bolt, the A to B equals CD. On a weekly basis, price is testing the bottom of its box. That's at 31.69. And on a monthly basis, it's below the bottom of its box. So one is at support. The other two say, not so fast out there. Now, the A to B equals CD pattern that Greg was referring to, because he asked the question, should he buy the D point out here? And here's the A to B pattern, A to B equals CD pattern. The A point was out here on the trading day of August 21st. Make makes a move down into the low on August 23rd, makes a little retracement into August 27. You see the 1 to 1.272. Greg was using a slightly different level, but that's neither here nor there. We're just using these as a measurement, as a guideline, as a ruler out here. And in fact, what Greg is looking to do inside AT&T is go ahead and buy a Gartley buy pattern. Buy a buy pattern. You'd think I could have a little bit smoother, but I can't. A little bit smoother delivery there. When we take a look at this A to B equals C, see there was a huge move off of the lows inside of AT&T, the low, by the way, being July 25th. And so what you like to do is say, Greg was saying to himself, boy, I'd like to get in on that action. But Greg knows that the best time to act is when you can see an A to B equals CD to the downside. That is only a retracement of that first move out there. And so the question is, do I buy today? And because price has hit one of these A to B equals CD price projections levels, and I'm going to say it's a qualified no, you should not. Why? Now, I'll give you the reasons why you can, and then I'll give you the reasons why you should not. You asked specifically about the A to B equals CD pattern. And that being said, if this is going to be a bullish turn here, if this is where you're going to buy the D point, you must wait for some type of bullish candle to form, some type of cavalry. It's not going to occur today. Well, it's likely not going to occur today. How do I know what the end of the day looks like? Wait for that to occur. The reality is, Greg, if it is going to occur, you ought to get it over the coming days. Why does Stevie say that? Well, on a daily time frame chart, what we can see is that prices move down into a level of support. I know you're going to say, but Steve, I thought you just said on a daily basis price was trading below the bottom of the box and therefore it's trading below support. I did. And thank you for listening closely. Now what we can also see is there was a gap to the there was a gap to the upside. That is a sign of strength out here, and that took place right here in the trading day of July 30th. That was at 31.45. That low today so far 31.48. To me, that qualifies as a test of a breakout. Breakout because it did volume of 64 million shares, and you're pulling back with 12 million shares right now. So it does make sense that price has stalled here. But if this is going to be the D point that you want to buy, it'll do something more than stall. It will really hold the support. Some type of bullish candle, maybe tomorrow it's a bullish engulfing, should then ensue if, in fact, this is the right time to act. If it's not the right time to act, even with light volume, well, then price can go ahead and fill the gap. It can go test the 31.21 level out there. And so, therefore, I'm saying stay put. Now, keep an eye on it. Even though you didn't ask about it, today is going to be day number 9 in the Tom DeMark setup counts out here. Now, as I take a look at this chart for AT&T, count number 9 in his setup routine hasn't really been a great identifier of a top or bottom the last 2 times out of the gate. The first time that we're looking at on my chart was back on July 19th. That didn't stop price from going lower. Likewise, the Tom DeMark setup on the upside August 8th, that really didn't stop price from moving higher. So we're going to discount the setup routine from Tom DeMark's system right now. Instead, we'll go with that gap. Instead, we'll go with, yes, the 1 to 1.272, but we're going to wait, you're going to wait for the bullish cavalry to arrive and generate some type of bullish signal. It does look enticing. No doubt about that. But let's just simply go back to your original question. Is this now time to buy the D point? And my answer there is unequivocally no. Wait for the cavalry. I hope that helps you out. We got a question here from RB. That's Richard. I've got a couple questions regarding gold. Can you help me to think about the recent downturn in gold price in terms of retesting lows and the volume we are seeing today? That was question number 1. Let's go to question number 1. Now, the problem with my daily data, it sucks. Can I say sucks? I just did. With regard to gold out here, is it's just not reliable with regard to the data. The intradays seem to be fine, and I don't know the answer why. But your question is really about, okay, one would be, does today's volume suggest that we're going to go retest the lows? And the lows that I would believe that Robert is asking about, he's referring to the trading session out here from the trading day of August the 16th, the top of which, the high of which is 1189. So far, the low today, 1195. Is it possible we're going to go test that? It's very possible. Why? Well, the bottom of its weekly profile that formed here Sunday night is 1189.30. So absolutely, that is a very viable and possible test. You also see that there's a brand new profile that formed out here a couple of days ago inside of Goldilocks, and the bottom of that box is 1192. So what I would suggest out there, Richard, is or Robert, I apologize, is I don't know if it's going to get to 1189 or not. I can forget about the volume. Just looking at market profile says, yeah, it's a real possibility. And maybe it's just a spike to the downside. It's just a test to that swing point. But I can also see where gold held right here, right now, the low so far today, at 1195.10 out there. So what is the second question? Hopefully that answers at least question number one. Second question, in the current situation, wouldn't an investor be better off cutting their losses with gold and staying on the sidelines until they see a good upswing in prices? Now, that's a great question out there. Is this a real bottom? Is this really the bottom? Gold will rally for 7 weeks. So, Robert, when we come back from this break, let's try to go answer that question. We'll look into our bag of tricks and see if we can find anything. We'll be right back.
Search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
TigerTV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're trying to answer good questions, solid questions that are asked by Robert B. And it's really all about gold. And, you know, what we're all trying to do is we're trying to find some type of certainty in a very uncertain marketplace with regard to, you know, is now the time to buy? Is now the time to sell? Is now the time to sit on the sidelines? And the last question posed by Robert was, is this the time to sit on the sidelines? And I will say, anytime that you have no conviction in a trade or investment, sitting on the sidelines is a good thing. Then you can just be a spectator, and you can decide when it is that you want to go ahead and enter the game. When we talked about the market profile, so I just want to back up for a moment here so that I can, because Robert's just looking for objective information out here. And even though I'm long gold, I'm going to give him objective information. It's information I didn't have until just a couple of days ago. And that is the following. In a beginning of a bullish trend, if we just simply take a look at the TAS market profiles, what you will see is you will see brand new profiles form above the prior profiles. And that is exactly what took place on August 30th. So on Friday, what we saw take place with regard to gold, Thursday and Friday, I take that back, is we saw a brand new set of profiles from. Now, these profiles happen to be bearish in structure. That means the center line is closer to the top. 12, 14, 15 is a real key level. So, Robert, you're looking for certainty. I will say with certainty that if, in fact, gold closes over 12, 14, 50, then you have certainty that this is a solid bottom in addition to the other information I have. The mere fact that price is pulling back, it hasn't broken support. And as long as it trades above and stays above 1192.60, all we're seeing right now is just a normal kind of retracement in what appears to be a bullish move. Why? Because we have a series of higher lows, and now we have a series of higher highs. So we have both of that. So here, the low I'm referring to would be August 24th. It's subtle, but it's a way to be able to pick apart. You're asking me to say, in essence, why is sitting on the sidelines the wrong thing to do? Again, no conviction. It's never the wrong thing to do. But with regard to little subtleties where this could be a bullish move inside of gold, that's one of those was the market profile that formed. Now what we do have is finally a weekly profile out here with 1189.30. I think that's the line of demarcation. If price closes below that, then you go back and you test the bottom of that level out there. Now, what are other bullish reasons out here with regard to gold? The strongest one that I can provide to you is that when gold has formed its other significant bottoms, these are the black arrows along the bottom of my screen. This one here has just been drawn in because we now have the fourth one where it uses Stevie's Rhodes momentum indicator signal. Do these work all the time? No, of course not. I haven't found that system yet. But when they form and certain things and certain criteria are met, what do? If you are a trader, you go ahead and you take action out there, and you just simply have the proper position size on, which means that you're not really risking more than 1% of your portfolio. Maybe it's 2%, but you're not risking. You're able to survive the trade if it doesn't work out. To me, that is how you get certainty in trading. It isn't about, is this one going to work out or not work out this time? It is about just simply making sure that you use the proper leverage out there, the proper position size. There is nothing more important than that. Nothing, because I can't control, no matter what the indicators say, what the markets are going to do next. What I can say is you have to have 367 trades in a row to lose all your capital with just using a 1% risk in order to blow the wad, so to speak, out there. And that's just not going to happen. You're not going to have that many losing trades in a row because you will stop before you get to 306. You'll stop before you get to 100. You'll stop before you get to 50 in a row out there. So position sizing, it's all about position sizing. Sit on the sidelines because I don't think you have the conviction here that gold has made its move, regardless of what traders around the globe are also looking at as we speak right now. And that is, yeah, you know what? The guys in that trade gold and euros are not so sure, but the lows haven't been taken out, and they did form that hammer candle. That means it's trying to form a bottom inside of euros. Inside of yen, we're just that was in yen. I take that back. No, that was euros. Inside of yen, This looks pretty ordinary for something coming off the bottom. Inside of pound sterling, conviction so-so. And like I said, inside of dollars, we've got now it's a third or second higher low out there. So things look pretty decent with regard to Goldilocks. I hope that that helps you out. That's the best I can do at pulling apart gold or really any instrument. We would do the exact same thing. We're agnostic as to what the instrument is that we're looking at. We've got a request. It's for October natural gas. It is a huge request out there, so we're going to get to it. And the question was, will natural gas get down to, where's Bob's question, 274 soon? 274. Why 274? Why is 274 the number? Is that an A to B equals CD? Let's go take a look at that. That A to B equals CD, that looks like it is forming. We would begin with our A point out here on August the 14th. Your B point now looks like that's going to be August 29th. Your C point out here is the trading day of August 31st out there. 278 would be your one-to-one A to B equals CD. And as long as price closes under 283, the exact number you'd be looking for is 2.83. Well, there you go, 283. And as long as it does that, 278 is open, 274 is open, and retesting the lows out here inside of natural gas from back on the trading session of July 19th. So the question was, will we get there soon? I don't know about the time frame on that. What we can say is if we look at an hourly time frame chart out here, you've made at least a retest of a prior low on a 1 hour time frame. You are trading into support of that 60-minute box, 2.825. I would say watch that level. The candle session has turned orange, suggests that there's going to be a new profile that forms over the coming hours. Last time, for example, when you had an orange bar out here was when this profile had formed. Before that, it is when the one that formed right around August 31st. So on a 60-minute basis, says you've got to get below that support in order to get real jazzy to the downside out there. Is there more information, Russ, that you need, or Bob, that you need with regard to natural gas? You were kind to wait while I was just kind of, blowing smoke or something and analyzing the other markets out there. But it was a good smoke, by the way. So will it get down there? You know, if you close below that 283 level and you're 2829 as we speak right now, it's either just testing that swing point on the daily basis, just like it sort of is on the 60-minute time frame. And if it closes below that, it certainly opens up the door for the A to B equals CD to the downside. So best of luck with that. Hopefully that information helps you out quite a bit. But if not, tell me, and I will make sure that I will get it to you. So you say, yeah, I just wanted to see where I thought the bottom was. We won't know till we get there, until we just kind of like with the question earlier about AT&T from Greg, in that we want to go ahead and see some type of bullish reversal candle, right? Because if this is an A to B equals CD, Russ, Bob, that you are using to try to identify where that next level is, it would be the exact same thing that we just did and take a look at AT&T. We won't know about being able to buy that D point until we see a bullish reversal candle form out there. So when we come back, we'll go see if there's any other questions. Look like the lines are open. You can fire away as well. Steve at TFNN.com. Just put radio show question inside the subject head. Be right.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. No email questions out there that I'm aware of from any of you folks, but I did. Is your email as bad as my email? Just the reason why I ask you to put in radio show question is so that I can in an instant go and scan and see a legitimate email, because the majority of what I get, when I say majority, we're talking the upper 95, 8, 9 percentile. Because when I do get an email from you, I immediately then go ahead and create a rule so that it goes into a certain basket so that I know it's, from a previous listener, subscriber, whatever it might be, so that I don't overlook it. Because when I then get back to my email system, I'm just immediately hitting the delete button for most of it. I do a quick scan just so that, I can free up my time and focus on the right things. But I did get an email, an interesting one. This one was from Natalia. And Natalia says that she really believes in destiny with a bright future for herself, and that I could become a part of it and be her true soulmate out there. And it says she loves traveling, movies, pop music, seafood, and doing crazy things. Sounds like what she wants to do is just spend my money out there. So did you guys get that junk too? Where does this stuff come from out there? I know you're all saying it comes from Russia. In any event, no emails out there, so that was just certainly a sidetrack, but it was a track nonetheless. So I don't know what to look at next. I'm surprised somebody hasn't asked me, where's Amazon headed to? And so I don't know, but it's headed to higher ground, right? Let's go take a look at Amazon, see if there's any issues out here with regard to Amazon moving. Oh, Hershey, Peak D. We're going to do something that's very legitimate out here. I think you might have asked about it before, and I just simply overlooked it. And if that's what I did, my apology. Because, look, you got to admit, chocolate, HSY, that has priority seating here at TFNN.com, because, the biggest chocoholic inside the entity is our leader. That's right, Tom. I guarantee you, he's already had some chocolate today. I know it. He knows it too. Or at least before his show at 3 o'clock, he's going to have a little smidgen, maybe more than a smidgen, of some chocolate. That's how we actually add greens and blacks, right? This guy's in the studio. Gals, they know, right? Yeah. in any event out here. With regard to Hershey, right now, peak, all it's really doing is just simply running into some resistance at the top of its weekly profile out here. It's a brand new profile that formed, and the top of that box is 101.55 out there. If price can, and that's going to be, are you long Hershey? Just curious, are you long this? And if you are, you're going to really want to watch to see if price can get above that level out there. And the reason is this, because it's a bearish structure. Now, again, let me just simply turn off price because it can tell you a lot about what it is as far as where the sellers are and what the bulls. I'm not saying to get out, by the way. I'm just saying you now have new data. Look, about the biggest benefit that I can be to you is to be able to provide you with where the battles are going to form, right? If you know ahead of time or while you're in the battle where there's resistance and where there's support, that's what trading is all about. When you break above resistance, you want to try to understand where's that next possible resistance level out here. And these TAS profiles, you can see that it's a very large box out here. So with regard to Hershey, the bottom of the box is 91.74. The top is 101.55, and the center is 97.87. Because the center line of this is closer in proximity to the top, it tells you that sellers reside inside that range between 97.87 and 101.55. So it's a brand new bearish structured profile. Doesn't mean it's bearish. We're talking about the structure of a box, where the sellers, you need to know in the game of war, and this is a game of war, buyers and sellers, where are they camped out? Buyers can overrun sellers, and sellers can overrun buyers out here. Now what Peak knows is that he needs to see this stock close above on a weekly basis. It doesn't have to be this week, but he'd like to see it be this week, 101.55. Because if that happens, there is nothing more bullish than a failed bearish pattern. And when I say failed bearish pattern here, just because of the new set of profiles. So prices stop dead in its tracks. If it gets above that, then what you're looking at is very likely move up to about the 105.13 area, which is the top of its monthly box out here. So is there anything that looks really bad inside of Hershey? No. In fact, today, the move that you like today is that price is back above its oscillator unchanged line. So you're back to a rising price oscillator above zero. But nonetheless, you're trading into resistance. You're not up to the resistance level in its daily box out here. So you do have your work cut out for you. But I can tell you two guys that are on your side out there, Pete. I like the dark chocolate with either a splash of orange. Do you like that orange chocolate? I mean, hey, how about those guys around Christmas time? They created those dark chocolate orange balls, you know. I mean, that was pretty smart. I wish I had thought about that. Or I like it with just a hint of mint, but that doesn't say that I'm going to turn it down if it's got some sea salt caramel in it, right? So there's three flavors that Tom and I are on board pulling for you. Although I will have to say, Hershey chocolate, compared to a lot of other chocolate out there, doesn't necessarily cut it. But neither of us are going to go ahead and turn that down. So I hope that helps you out there, Peak, with regard to Hershey's. Now, I'd mentioned Amazon, so just for the heck of it, because somebody might have said, well, you said you were going to do Amazon, so go do Amazon, AMZN. It's off of its highs out here today. But do we see anything that suggests that, this high is a significant high? Is there any pattern or anything? In fact, really just the opposite on a daily chart, just simply with a daily time frame. And the reason that we can say that is because on Friday, that was Friday, what this formed was a time to mark setup 9 count out here. And today you're above that. And so when you get above these, it's just kind of like, boom, you're blowing right through resistance out here. And that as long as, I don't know what the end of day session is, but if price closes over the high from August 30th out there, that price is 20.2557. On a daily time frame, let's go see what wave are we in right now. You're only in wave number 4. There certainly is an A to B equals CD to the upside that is in play out here, but it's already at the 1 to 1.272, much like Greg was looking at, which was to the downside inside of AT&T. So this would say to us, hey, 21.17, another 70, 80 bucks to the upside. That doesn't mean it stops there, but looks like that is the target, the next target for Amazon, kind of over the longer haul, so to speak. If we look at the monthly chart out here, I have no human possible way, I probably could find a way, but I don't have any real way of being able to use that chart and project where price is headed to. Take a look at this is the Rhodes Momentum RMI3 signals out here. These little red boxes on a monthly basis. And now you didn't need me to tell you this, but you sort of did. So you see a green box back here in 2014, and ever since then, all we see are these red boxes. The momentum play inside of Amazon, and by the way, last week you just had last month, the month of August, you just had another one. That is just buying pressure all over the place inside of Amazon. The amazing one, Amazon, is going to continue going higher. Let me just put it to you like this. Please don't go short this equity. Steve Rhodes with TFNN. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So, kind of to finish off the segment here, the show here, Peek, I don't know if you meant to, but I think you did ask about Nestle's. The ticker symbol there, folks, if you're following along at home, is NSRGY. Now, the top panel of my screen out here is the chart for Nestle's. So it's Switzerland, Swiss-based company. And as we take a look at this chart here, what I wanted, and this is a more complicated chart, my opinion, more complicated than looking at the Hershey chart. If you take a look at the top panel chart, you're going to see lots of little gaps out there. Now, normally, and I'd mentioned this during one of the equities that we were taking a look at, was price was coming back to a sign of strength, a gap to the upside. I think it was AT&T, as a matter of fact. But in this case here, what you're going to see is that the center chart happens to be the Swiss franc, U.S. dollar currency pair. And I just simply wanted to show you, the bottom panel shows you the correlation between those two. And so even though, so you're trading two instruments. You're trading the performance of Nestle, but then you're also having to contend with the U.S. dollar, the strength or weakness of the U.S. dollar in comparison to the Swiss franc. So it is a much more complicated vehicle to trade, very similar to, what is it, Freeport-McMoran. If you're trading Freeport-McMoran, you've got to keep one eye on the Australian dollar, the other eye on the Australian dollar, and then you got to keep that third eye, on the different metals that it mines out there. So it's a more complicated chart or stock to actually investigate. Okay, in any event, I just thought that I would throw that out there. That was a nice, smooth move into basically saying that's how we were going to end the show. So watch today. We've got a market that is confused, or I'm confused. It probably will go with I'm confused. Still, as we speak, at 156. Support is held in the ES-Mini, the NQ, the Dow, and the Russell 2000. However, we have a spot volatility index above its 50-day. New York Stock Exchange advanced decline line below zero out there. We have a good old-fashioned tug-of-war. I don't know who's going to win, but we'll go find out tomorrow. Thanks for joining us, folks. Have a great day. We'll see you on Wonderful Wednesday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading